What is up, stock investing family? Today's video, I'm going to show you how you can use support and resistance in your trading on the chart to make some money. Let's get into it. Andrew Ferguson back with a video today showing you guys support and resistance lines inside of TradingView.com, the online browser that I use when I'm trading. I do use interactive brokers to make my trades, but I actually do my trading in TradingView because the interactive brokers charting to me is not as interactive or intuitive as I like to be. So I use TradingView. If you guys want a kind of discount on that, you can check out the description in the comments for this video. Now, support and resistance. First thing you need to know is that these are lines that are going to allow you to do a couple things. Number one, you see a lot of kind of up and down and kind of all around on the chart here. We're going to kind of make you aware of areas to better understand where the stock price might go in the battle that's going on in the background. Okay. There's a battle happening with the buyers and sellers. On a selling day, it's candles are red. If it's a buying day, candles are green. So you understand that battle that's going on. And we're going to show you that with support and resistance today. So the other thing it's going to do is give you confidence to make your trades. When you understand the battle, you understand what's happening, you become a more confident trader, not second guess yourself as much. And the third thing is that eventually these will get lines that you can actually use to make yourself money long term as you understand where support and resistance are going to go and what part they play in your stock investing. So to bring it down for support first, it's basically just a floor. And when you think of a floor, I'm going to put a line right here just to show my point here. And we'll go all the way down over here. Think of this as a line where if you were to drop a ball, it would go down, hit the floor. And when you drop a ball, what happens when you drop it? There's force coming in the other way. You're going to drop, and go back up, right? And then it might drop again. It might come back down. It's going to hit that floor. It's going to bounce back up. It's a point where the stock does not want to go underneath. And you can see that point in the last kind of calendar year being right here, okay, right there. That's a point where it doesn't want to drop beneath, and that's acting as a floor for now, okay? But that's how you have to think of it. When you see a floor, it's boom, it's not going to drop past that point. If we zoom out a little bit further, we have to kind of find the low point in here. And if I was going to zoom out to kind of see this over the past few years, we're going back to 2020, there was a big drop there, okay? I'm going to change the chart from days to months here just to make it a little bit easier to read in terms of time. We'll open it up a bit. I'll close it down. Here we go. Now we're getting an extended time period. We're looking at a 2008, 2024. So the floor here would be right around here for the past kind of 4 years, okay, right around there. So if you extend or kind of compress your time parameters, you can actually change the floor and see where the actual stock was maybe headed. It depends on how far it's going to go. But let's go back down to the daily chart now and just zoom in a little bit and just kind of get that idea that yeah, that was in 2020. That's where the floor was. But like more recently, we've had this kind of slow march downwards, and we've hit this point now where we've bounced off and we keep making lower lows. So right now we're going to put the floor right there. If we want to talk about why a floor exists, it's because at that point, it's becoming too good of a deal for other investors on the sidelines to actually scoop up shares. So when it hits this point around this kind of 347 mark for the S&P 500, the SPY, it becomes too attractive for other investors to say, no, this is too much of a good deal. We're going to step in and start buying this. That's the psychology going on around this area. So it peaks back up and starts taking off and going back up. Okay, that is the support. Now, a ceiling, on the other hand, a ceiling, well, it's pretty simple here. It's the top out or the topping out point. I'm going to make this a different color for you guys so you can see it. Instead of yellow, we're going to make it blue. And so the top is the ceiling right here. And instead of the ball kind of bouncing and bouncing back up, it's a place where the stock price or a ball cannot burst through. So if you threw a ball up into the ceiling like this, it would hit the ceiling and ricochet back down, right? And then if you did it again, it would ricochet back down. That is what a ceiling acts like. And then the ceiling right here for this kind of area that we have shown on the chart is right there, right around that 480 line. So if you wanted to kind of get an idea of where the stock price is going to have some trouble of potentially breaking through long term, it's going to be around that 480 mark because it hit that and it bounced down. So generally, when you see a high point like that and you see the stock price approaching it, what you can say is that there's probably a lot of other people out there thinking the same thing, like this is where the stock price got to last time. I may have made some profit, so I'm going to take some profit and sell my shares of the SPY at around that 480 mark because that's a good point where I saw it drop last time, okay? And it just becomes too much of a point where people want to do that profit taking, and so the stock starts to kind of have trouble breaking through that 480 kind of range. Now, those are kind of the main support and resistance here, but if you kind of dig a little bit deeper, you can actually see a couple more in the data set as we go through here, okay? I'm going to move this line around as we go, just because there's a couple more that we want to kind of look at. And when you're looking at support and resistance, you want to see points where it's been touched multiple times. What I mean by that, I mean like right here, okay? Right around here in that 373 area. If we go into there and we'll just move it over here, we see that for this line. I'm making it red for support. Okay, it acted as support in here. We kind of touched it once. It kind of broke through, but it popped right back up. It hit it again 2, 3 times. Your lady, right, popped back up and went up. And again, it had a little bit of a trouble getting through here, but when it went back down, it popped right back up to that area. And it's kind of been all over this area. Again, you see it right here, like 1, 2, 3, 4, 5, 6, 7, 8 times. It's been hovering around 373. That's a really strong area of support right now. And there's a battle going on around that 373 that where people want to kind of push it lower. People are saying, no, it's a good deal. We're going to keep buying shares around that 373, and we're going to keep kind of the price above that line. So that's kind of the area where I see kind of the mini kind of floor right there. And you can see the kind of a mini kind of ceiling as well, kind of popping in this area. It's starting to hit right around this area around 409. Okay, I'll make that one green right now for you. So we see that here. It kind of was hovering just a bit above that right there, but it kind of had this big candle that was stuck on the top of it and dropped right down. We got around there again, kind of hovered around it again, met it again, and now we've kind of touched it twice here. So 1, 2, 3, let's call it 4, 5 times. It's kind of hit around that kind of floor or ceiling area, ceiling area. And that's kind of the area of kind of great demand where people are kind of taking profits right now between 373 they're buying and 400 they're selling right now. So that's kind of the range that we're kind of bound in. And obviously you have these kind of overlaid kind of buffer areas that I'm not going to talk about today, but we'll talk about in another video in the future. But these are kind of the way you look at and find support and resistance lines. So what happens is that if you see the kind of the stock price going to these support resistance lines, especially at the bottom, you can see it's approaching 340, 347. You can say to yourself, okay, investors before picked up that deal at that point. So that's a good area for me to potentially get in and get a little bit of position here, whether that's buying shares, whether that's selling put options, whether that's kind of doing your strategy, whatever you want to do to kind of get in the market. That's a good area. And obviously it could break below that, but we're saying that it's hit that point a couple times before. So that's kind of giving you an idea, or even up here at the 373 area, it's giving you confidence as an investor to say that it's kind of done this before. Past performances don't produce future results, but it's a good kind of marker and it's a good psychological benchmark for people saying it's not just me doing it, it's other people in the market seeing that this area is a support area and that's likely to kind of cake and bounce off of it. So that's how you gotta view that as you're going through and looking for these lines of support and resistance. And now the other thing I want to talk about is that if you want to go ahead and just make money doing this, you have to really identify and kind of be okay with a little bit of kind of breakouts and retests. What I mean by that is that if you break out through the kind of the floor or the ceiling, it often kind of goes up and then it'll kind of stay there and it'll break back down. If you see a kind of an outlet where it breaks up and goes above, comes back down and touches the line and then takes off again, that confirms a true breakout. We put the T there for true. Okay, that's a true breakout. And you have to have a kind of rejection and then kind of push back up and the line holds and the actual ceiling becomes a floor as you want the next leg of your stock market kind of move. The actual bottom though, if it kind of broke through here and then kind of bounce back up and try to break back up through the floor, it then becomes a ceiling where the stock price tries to drive lower. And you've seen that kind of this process happening right here, where it kind of broke through, or right here, it went through, then it kind of didn't, and it broke lower. Okay, same thing here, kind of went back up here, broke lower. It's happened a few times here in the last little bit on this stock chart. So that's how you can look at and see support and resistance on the chart. But there's one more thing I want to show that is just kind of a big kind of deal when you're looking at it. It lies in these kind of lines above and below kind of these breakout lines here, where you have these kind of things I like to call buffers. And this is what I see people getting wrong a lot, is that they don't understand what buffers are. They don't understand the importance that they play when you're just above the line, you're just below the line. They think support and resistance is kind of a finite kind of point, and you have to kind of expand your mind to where buffers exist and how they work. And to understand that a little bit better, make sure to check this next video. Subscribe if you got some value today, and I'll see you guys on the next one.